Financial Officer, with us to share the results of the FY22 year. Jason will present the key highlights and take you through some updates to Envirosuite's very exciting product suite. Justin will then take you through what we believe are some equally exciting financial numbers, following which we'll do a quick Q&A. So if you look at the top sort of middle section of the team screen, there's a Q&A button. If you click that, you'll see a Q&A panel appear on the right-hand side of your screen. Type any question that you might have into that box and press submit, and we'll do our best to answer as many questions as we can for you today. We expect the presentation to last about 30 minutes with 10 minutes of Q&A, so we'll be wrapping up this session at 10:10. So over to you, Jason.
Thank you very much, Warwick, and thank you everyone for tuning in today. Incredibly excited to present our results today here with Justin. This is my second year as CEO, and I think the results are really starting to come together and really building strong momentum. Our front cover is not by accident. This is a planned communication to everybody. We are accelerating growth and we have a clear pathway to profitability. And today we're going to talk through those results and what this means for the company from FY22, but importantly, what it sets us up for moving forward. There's the obvious disclaimer, which you can read at your own leisure. So as Warwick has indicated, we have a structured agenda here. You will have met Justin at different times, but this is your first annual report, Justin. So thank you.
Thanks, Jason. Looking forward to it.
So Envirosuite, we are now proud to say we have got the world's most advanced environmental intelligence technology platform, and as such, we are the provider. We have spent time over the last 12 months working out how we communicate our message, and we have now refined this down to this key part here. What is our difference, what we do, what are the products, and what's the value we create? Last week, we put on a product overview to the shareholders, and it was actually attended by over 100 people, and we've had overwhelming feedback on just how impactful our software technology is, and appreciating sometimes how hard it is to communicate what that software is. And we took that opportunity, and we will continue to share that as we move forward as an organisation. There's a couple of key parts I want to call out today, and which is our difference and the value. We are scientifically based, and that science is built into everything that we do. We have a strong commitment to our customers, and we listen to those customers. We build this out from human ingenuity, building in environmental technology. So whilst we're a technology company, it is our people that lead the way of creating this world-class technology. We are providing ESG enabling software for our companies. And these are companies who are not just doing the greenwashing, these are companies that want to have a real impact of how they engage with the environment and the communities, which gives us this leading environmental intelligence platform. The value we create is built for today and strong outcomes for tomorrow. So key highlights here. Last in FY22, we had a very strong revenue growth. So 53 million, up 14.1% year on year. Statutory revenue of 53.5, up 10.1% year on year, which is 82% recurring revenue. 9.6 million project revenue in FY22, up 17.3% year on year. And this is driven by strong sales growth throughout the year. And as you would have seen from our Q4 results, incredibly strong at $6 million. And it is that platform that gives us the clear pathway to profitability moving forward on an adjusted EBITDA position. And this will happen during FY23. There's a strong improvement in cash flows across the business. We have set up very much a transformational year in FY22. We have built out the executive team with strong appointments in the company. We've invested into product and technology. We did do the cap raise in water, and we have used that resources, the capital there, to accelerate the growth in the water platform. And importantly, we've invested into systems, processes and tools, as well as additional locations to drive our scalability. We have got now a very strong and complementary product suite across all three platforms. Omnis, which is clearly the growth engine of our business. Aviation, which is incredibly stable and gives us strategic growth opportunities and access to large cities and governments around the world. And EVS Water, our high margin, high growth product. There's one strong call out here which we would like to reflect on, which is the growth in Americas, 31.3%, which has now become our largest region by revenue. But we are only scratching the surface, and that's the important part. There's a lot of headroom here to go in the key market segments. So our business snapshot, we are structured in three product suites: Aviation, Omnis, and Water. For those of you new to the story, they solve three different parts. So Aviation, the Omnis is the industrial, and Water is fairly clear. We've got now 416 total sites, with America's leading there with 175 sites, 254 employees, and we've got over 4,000 connected IoT devices connected in the field. So from the key metrics, we want to be consistent in the way that we communicate this. So the top 5 points are the same as what we did for last year. As I've said already, 53 million in annual recurring revenue, 416 client sites, 53.5 million in statutory revenue. Importantly, our gross profit is now 47.9%, which is a 10.8% increase last year. And as you'll see from the graph in the middle, it continues to increase. And we will continue to drive the gross profit improvement moving forward. And we ended up at the year with an adjusted EBITDA loss of 4 million, which is an 11.8% improvement. From a revenue perspective, the key statistics here I really want to call out is the 23.9% growth in the Omnis. So this is the middle graph. So 18.1 million on ARR by Omnis, 33.9 with Aviation, and Water has hit a significant milestone of 1 million, which is in line with our expectations for the first year of bringing that product to market. As I've already said, the Americas had exceptional growth, hitting 19.9 million ARR, which represents a 31.3% growth. Asia Pacific, 17.2, and EMEA, 15.9 million. From a product suite perspective, let's start with Aviation. As you would have seen around the world, planes are starting to fly again. We're now at 68.7% of pre-pandemic levels. For those of you who watched the aviation session last week, you would have seen the carbon emissions platform, which actually showed the fall off of flights, but then actually climbing back. We will continue to see that grow in the coming months and years, and we have supported our aviation customers around the world through that period of time. So to have a growth from 31.8 to 33.9 million is a strong growth story. And what we're now seeing as the outlook is that there will be investment flowing through from the aviation sector into replacing some of the aging infrastructure, which will result in the new microphones, which will then lead to additional ARR. We're also adding additional sites coming through. So you would have seen a 5.5% growth on our already very large customer base. From a case study, and it's important to really call out where we add value to customers. And so from the aviation side, we've chosen the customer here, AEST, which is our Spanish customer. And this is aligned with our mission. We are driven to create world-leading science-based technology to help our customers act faster, perform better, and realise their full potential with environmental intelligence. And here with AEST, we've been able to support this customer over the last decade and more on their growth journey. In this particular situation, AENA had fundamental issues around capturing and calculating the greenhouse gas emissions for aircraft. It was both inaccurate and it was labour intensive in the way that they did it. So our carbon emissions tool was evaluated and then signed up by AENA to help them meet their growing concerns around how they measure and how they drive meaningful change. Importantly with AENA, it is a strong case study that can be replicated throughout many other airports. In Omnis, this is clearly our high growth product suite, 18.1 million of ARR. So 231 client sites with some of the largest customers in blue chip logos around the world. And whilst we're only getting going on the land expanding scale, we can see a lot of potential growth here within our Omnis platform. Importantly, we've now added noise and vibration to the platform. We also added additional segments, including cement and energy, which is oil and gas. So Omnis contributed 56% of new ARR this year, which is a strong contribution. And we see this trend continuing because of the huge impact the Omnis platform has for our customers around the world. And there are cross-sell opportunities between Omnis and water, as we demonstrated in the end of Q4 last year. Moving to a case study, we have Lafarge Cement. And this is an important one because it's the first significant cement facility that we've signed on. But aggregate industries are wanting to be proactive in the way that they manage their impact to their environment and to the community. And we've worked hard with them to come up with this solution. And it's a full turnkey solution, which we believe is highly scalable and repeatable around the world. From a water perspective, it's clearly a high margin because it is entire SaaS. What we've found now with the customers that we've signed on is strong value creation with our customers. Importantly, from a revenue perspective, we're at the top end of where the range was of that 40 to 80, at the moment averaging 77K on the sites that we have got. We've closed out some really significant customers and we've now got traction in North America and also in Europe, as well as here in Asia Pacific. And we're seeing increased demand across all of those three regions for this product offering. Our City of Kalamazoo is our reference on this one, and this is aligned with our purpose, because we believe environmental intelligence is the key to improving the well-being of people and the planet. And here with Kalamazoo, it's a 500th largest city in America, so we see this as immensely scalable across the US. But here, the SUEX model is being now integrated with the same customer who bought the Omnis platform. There's high trust with us as a company and high trust in what the platform can do. And we'll be continuing to share some of the insights that Kalamazoo has on this part. From a company perspective, it's important to reflect on what we told you last year that we would do and what we have done. So to each part of those dot points, this was actually included into last year's annual report as the outlook and our strategic objectives. We've achieved each one of those dot points. But without labouring each one, there's a few things there that I do want to call out. We have now created a global brand and awareness with Envirosuite. We have focused our R&D investment into research, product and engineering. We have continued to focus on customer and the optimization of project deployment times. And this is both in the software product, our processes, our systems and our deployment. And as we continue to scale, we will continue to deliver significant improvement in our gross profit results. The last slide for me before I hand over to Justin is our land, expand and scale. This is really starting to get some momentum, but the reality is that needs to be a stronger focus for us in the coming FY23. AENA is a strong example of where we've supported from our first airport back in 2006. We then added 11 additional airports. And then last year in 2022, we added a further 3 airports. We have supported this customer through one of the toughest times of aviation history, but we have set them up now to be able to grow beyond these sites. And AENA is an incredibly important customer for us both now and into the future. So with that, I'm going to hand over to Justin.
Thanks, Jason, and good morning. Turning to slide 19 on our financials, talking to revenue and revenue growth, we can see some exceptional results there in terms of our recurring revenue increasing 8.6% across the year. But more importantly, we also can see in our non-recurring revenue an increase of 17.3% up to 8.2. The pleasing aspect of that is twofold. One is we see our non-recurring revenue as a lead indicator for our recurring revenue, whereby in our projects, we have our customers who in our aviation business buy the hardware upfront, and then we service the customer over the term of the contract, anywhere up to 5 years in our recurring revenue side. The other point to raise is we're seeing increase in investment by our customers in the post-pandemic position where they're refreshing their instrumentation at both airports and within the Omnis business. So again, a pleasing return, if you like, to a pre-pandemic business environment. If looking to our gross margin improvement, we can see that we've had an 10.6% increase in our gross margin percentage over the period. But even more pleasing is our growth in our gross profit of 21.8%. What we're seeing here is our revenue leverage, whereby our total revenue's gone up by 4.9 million on the delta, whereas on the gross profit side, we've had an increase of 4.6. This revenue leverage, as I like to call it, represents the investment that Envirosuite has made in our ability to deliver quality services to our customer base. On the EBITDA side, our improvement for the period of 6.9% to a loss of 4.4 million is a result that we stand behind. And more importantly, on the adjusted EBITDA side, we have an improvement of 11.8% for the period. The 11.8% again representative of the underlying investment and quality of earnings that the company has. For those of you who want to understand the makeup of our adjusted EBITDA, we have a reconciliation provided in the pack that we're going through this morning, but pointing out that the sizable contribution to that is our share-based payments. Moving on to slide 20, where we talk to our key metrics by product, we can see that our SAM, or Serviceable Addressable Market, represents a great opportunity for Envirosuite. And you've heard from Jason how we're approaching our markets from a regional and global basis, leveraging our regional and cross-sale opportunities between the products. As EVS Water continues to grow with the number of single point and cross-sell opportunities, the average ARR per site sits at 77,000. With the data points we now have, we expect this trend to remain at the top end of our originally published range. Overall, we are very much satisfied by our churn result, particularly in aviation and of course in water. In terms of Omnis at 6.6%, that is very much a managed position from our side, where we have managed certain low margin customers, regions, and where we had conversations around pricing arrangements. So we see that as a managed position, not so much, or certainly not a position in terms of customers churning where we were unhappy or they were necessarily unhappy with our product, service and delivery. Turning to slide 21, we provide here our annual recurring waterfall where we demonstrate the recurring revenue for FY22 up to our ARR for the period. What we've got here is an exceptional position of setting the company up for FY23 results and performance. With 6 million of ARR sitting in our sites, but not that are yet to be implemented, represents a great opportunity and an area that the company has been focusing on over the last 6 to 12 months. Our focus on inventory level management that we've discussed at the half year has largely dissipated, with inventory levels meeting and managing our customer demand. Of course, significant effort has been put in place by our customer success team, with our renewal focus becoming and maintaining a high level of focus across the team. Looking at our expenses on slide 22, or what we refer to as our operating leverage, there are some key elements that are worth pulling out on this analysis. First one being our leverage on sales and marketing. What we're seeing here is that as our revenue has grown, so has our investment in our sales and marketing activities, remaining relatively consistent across the two periods. Again, this leveraging or maintaining of the investment is certainly indicative of the fact that we are able to share ideas, personas in the customer set across our global customer and sales base. Moving to our general and administrative position, there is a slight increase in that one, and that is largely representative of the finalisation of the global leadership team transformation that Jason spoke about earlier. We have also implemented during the period our Centre of Excellence in the Philippines, and that is giving us the ability to further leverage our G&A costs going forward. At the end of Q1, we expect to have around 20 to 25 people in that centre, and results to date in terms of quality of people that have come on board have been exceptional. Turning to our R&D cash spend, of course, this is in line with our expectation on what we've been investing in our product over the last 12 months and showcased recently when we presented across the Aviation, Omnis and Water platforms. There is no doubt, as those of you who tuned into that presentation would have seen, our delivery against our product roadmap. What we demonstrate here in our R&D cash spend is a combination of both capitalised costs and those that we've expensed. While it might be a nuance to the accountants in the room, it's important to note that our capitalisation of costs is around 45% of total, with 65% expensed through the P&L. Moving on to slide 23, we have a detailed analysis, if you like, in terms of where we're seeing the underlying trend in our cash flow. As we can see here, over the 3-year period, our operating activities cash flow has shown a significant improvement over the period of over 50%. That is driven by the substantial revenue growth and the gross margin growth, both in dollars and percentages. You can see in that middle graph there that our capitalised development costs have increased over the period of over 150%. Again, representative of the cap raise that we undertook in calendar year 21 and invested into the water product, but also representing our capitalisation across the Omnis product, which was demonstrated last week, and of course, Aviation. Combining these, we can see that our adjusted operating cash flows across the 3-year period has been an improvement, with our cash flows generated in FY22 more than supporting the investment that we're making in our capitalised development costs. These are some very important trends that we have within the business that supports where we're looking for, or where we're looking to as we move into FY23. Moving to slide 24, our strong balance sheet. We have finished the year with cash in the bank of 16.3 million, which is a result planned for where we expect it to be, and more importantly, puts us in a position for growth. We have no debt, and we are fully funded to execute to our current strategy, requiring no further capital raises. Again, to stating, fully capitalised to achieve positive cash flows. Moving to my last slide before handing back to Jason is to talk through where we're sitting on our pathway to profitability. As Jason mentioned earlier, we have the world's most advanced environmental intelligence technology platform that we're able to leverage across our aviation, our industrial clients through Omnis, and EVS Water with our water products. We've demonstrated the leverage that we're generating through revenue, the ability to transition 4.9 revenue growth into 4.3 of gross margin. We've demonstrated that the operating activities for the period, over the period, have increased significantly, again demonstrating strong, efficient cash management. We've also shown that our ARR by region continues to increase, and as an Australian technology company with existing success in Americas, the growth of 31.3% is a great outcome and again supports our growth position. Our growth in our product, in our engine room, if you like, with growth engine room with EVS Omnis of just under 24%, again points to the underlying success that our sales organisation is having in growing the customer base and revenue opportunities in that business. Taking those components, along with our experienced and focused global leadership team, we're very confident that we have a clear pathway to achieving adjusted EBITDA positive position during FY23, a result that we are looking forward to delivering as the year progresses. Now I'd like to hand back to Jason.
Thanks, Justin, and thanks for talking through those numbers. So as we close out this part of the presentation, I want to spend a few moments just looking at the outlook and reconfirming our strategic priorities. This has not changed from what we set last year. We are focused on 4 key pillars: growth, product, customer, and scale. We will continue to drive growth through site acquisition. And this is important to us as we build out this platform to reach as many people as we can. From a product perspective, we will bottom down on our differentiation around science, and we will continue to invest as to the right metrics being a leading technology company and leveraging cloud-based platforms to accelerate new ideas and how we serve our customers, both from a deployability and reliability perspective. We will spend more time focusing on the measurable value creation with customers and understanding how we make that meaningful impact to drive our mission, our vision, and our purpose further. And importantly, we'll continue to scale the business, building on the base that we've now got across the management team, across the technology team, across sales and marketing. FY22 was very much a transformational year. FY23 and beyond will be now executing to drive further scale. So with that, I'm going to close out the presentation and hand back to Warwick for Q&A.
Thanks, Jason. While we while we wait for some questions to come through in the Q&A panel, which, as I said, you can submit by just clicking on that Q&A, typing out your questions and submitting it through to us. We can go through some questions we've received by email to the investors@envirosuite.com address. The first one, Jason, for you is looking at the traction in water. Have you got further traction in the Australian water utility market with SUEX, and what is the update with Watercorp?
Thank you very much. So look, Watercorp continues to roll out. So you would have seen from the Q4 that we added some additional sites. The SUEX platform is becoming far more meaningful in the way that Watercorp is understanding the catchment areas and the impact that SUEX can have. So we're working very closely with them on that. So this is continuing to gain traction with the customer, and we're now able to use that very much as a reference within some of the other Australian utilities. So moving to the second part of that question, we are engaged with additional water utilities here in Australia, which we will be updating the market in the quarterly reports around those additional wins as we move through. So we're well positioned, certainly here in Australia. Just going to the next part of the question that's not there, but certainly from a market acceptance point, I think validation in Europe has been very strong, and we're starting to see additional opportunities come through, both for Optimizer and for SUEX.
Right, we had this question submitted on email as well, but it's come through in the Q&A panel. What is the actual total SaaS revenue across all product lines, and how much hardware is in the recurring revenue line?
Right, I'll take that one. So going back to our recurring revenue numbers, I'm just going back to the slide. So on slide 20, we have identified what we're seeing as recurring revenue and non-recurring revenue across the key parts of the business. When we talk to SaaS revenue and meaning recurring revenue, that's in the line on recurring revenue, and the non-recurring being our product or service delivery component. So that's the split across there.
Great. One more question, just asking for some commentary around the cash position, Justin.
Sure. So in terms of cash, we finished the year off at just over 16 million, slightly ahead of where our expectations were, so a very good outcome there. But as I've said, we are well capitalised with our cash balance and having no debt to see ourselves through to cash flow positive positioning.
All right, and then just sticking with the financials while we're on them, the gross profit, you reported an increase in that gross profit margin. Where will we get to in the next 12 to 24 months?
Well, I think it's fair to say the gross margin position is not acceptable as being in the 50s. We see the real opportunity for Envirosuite as EVS Water comes on board and continues to, or starts to make a bigger impact at that gross margin level. We certainly see gross margins in the 60s as being achievable. Maybe not in FY23. We certainly see that as being achieved in the high 50s, but we certainly see gross margin post that as being in the 60s.
All right, looking at the expense line now, the cost growth for FY23, what are we projecting in terms of expenses?
Look, I think in terms of our expenses, one of the things that we have looked at there is what are our opportunities in terms of cost out initiatives. Where, as we mentioned, we're very excited with what we've done in the Philippines with our Centre of Excellence there. We're also looking at regions where we can get quality personnel to deliver to the Envirosuite solution set. So with our global platform, we can continue to look at various locations for labour to capitalise on that. As we mentioned earlier, the leadership team, the global leadership team, has largely been put in place. And while we will continue to move and monitor that, we see that as being a base for growth for the future. So we see on the OPEX side, we see that as being maintained at a G&A level, relatively consistent. On the product development side, we will continue to invest in that as it makes sense with our customers and what the market demands are. And sales and marketing, we expect that to retain at that level or slightly improve as we continue to leverage our global revenue growth.
Very good. I think this question relates to aviation. It talks about the project sales and refreshing of instrumentation and the impact that has on ARR. Jason, did you want to give a bit more context?
Yeah, no worries. So what the business model that we've got, we are selling high-end microphones, so we're a vertically integrated company. And by selling additional noise monitoring terminals to airports around the world, we see that is one of the stimulus packages that will come through governments and private industry. Now, this will also lead to, as you get more monitors, additional ARR coming through. So it will be good for project revenue and lead to the important part around our subscription model.
Okay.
So I was just going to add in, what's important to note is the platform, the Envirosuite platform and the instrumentation are a closed circuit, if you like, in terms of the instrumentation and the platform are required to speak to each other. Where airports are making that investment, in instrumentation, they're also likewise locking into the aviation platform.
Very, very good. I think we had a similar question in the product demo that we did last week. When you are approaching enterprise customers, what's your entry level into the organisation, and what's the approach with enterprise customer levels?
It's a good question. I mean, this comes back to the value creation part. If you look at the enterprise, we're going to get that in the water business and the owners primarily, because they're the scale customers, right? So what we're looking for is true, measurable, return on investment, metric-driven part to be able to take into your stakeholder and then, your sponsor within that. Once you get to multi-sites, it becomes a very different discussion around how you're strategically helping them meet either their compliance or their regulatory requirements. The important part for us is, our revenue is highly predictable moving forward, even with a downturn, because of the regulatory requirements to it. So within that enterprise push here that we're going to be having moving forward, we do want to come back to the hard fundamentals. We want to be focused on the regulatory and compliance requirements, but we also need to make sure that the customers are getting increased value out of it. We have a strong customer success organisation inside the company, and so that helps the customer properly leverage all of the capability of the platform, and that's something that we measure ourselves by as well.
Very, very good. That's all the questions that we've had submitted through the panel. Any further questions, please submit them to investors@envirosuite.com. We'll come back to you and answer that. A recording of this, as well as the product demo that we did last week, will be sent around this afternoon, so keep an eye open for that. And hand back to Jason to sign off.
Thank you very much, Warwick. Thank you, Justin, for helping me today, and thank you to all the shareholders for joining in. I saw the number on the screen get to a very high number, so thank you, and thank you for the support. FY22 was very much a successful year, a transformational year for Envirosuite, and I believe we're incredibly well positioned for the coming years to really leverage the strong fundamentals we've put in place, but as well as make an impact. And, we are the global leader for environmental intelligence. And it's our opportunity and also our obligation to really drive that success through as a company. So thank you for tuning in. We look forward to engaging with you more frequently in FY23.
Thanks very much. Good morning.